All right, stocks came back from the Thanksgiving holiday and a little bit of a hangover, as there wasn't very much of a move today. In fact, the move today was about half as big as what the half-day session was on Friday. So, very, very slow start to the week. Now, typically Mondays are light, but this was pretty extreme, and it also produced some relatively extreme indicators in terms of volatility and the decline in volatility, especially when combined with such an extreme high on the skew, which we'll break down as well. We'll take a look at all the moves that we're seeing. There are some important moves in different asset classes that are having an impact on risk appetite as we continue to produce another new all-time high, the 54th of the year. Again, making it the fourth biggest year of new highs. Trying to move up towards number 3. I think number 3 is well in its sights. 2021, of course, is number 1. Remember, our Black Friday sale is last day for the Black Friday sale is today, Cyber Monday. It ends tonight at midnight, so take advantage of that. It's a 20% off discount of our premium subscription, which basically gives it a 40% off from our normal monthly plus rate, which is our basic subscriber level. So pretty good to get your premium subscription for 40% off of what the normal basic subscription rate is. But that's why, again, as I've said before, it's our most popular sale. So take advantage as you can. It will end tonight, and we only offer it once a year, so it won't come back again until next Black Friday. And of course, I'll show you here later in the video where you can get some information on how to do that here before the evening closes. Our trade idea happened to come from the worst performing sector of the day. So let's go ahead and get started. Today is Monday, December the 2nd, 2024. This is the Market Outlook from MarketScholars.com. My name is David Settle. Before we get going too far, I invite you to subscribe to our YouTube channel. This icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Remember, tonight is our last night for the Black Friday sale, all the way up to midnight. 20% off, biggest sale of the year, best sale of the year. So make sure you take advantage of that. Follow me on Twitter for more content between the videos, and join our Market Outlook Facebook group that we've created. All right, if you're watching us here on our blog, check out some of these other things over here on the right, including our Market Outlook live videos, where I take a look at old trades I've done in previous videos to see whether we should stay in them, get out of them. We also put on today's trade already before the market closed. In that video, it's at 3:30 Eastern time. On this page, on any Market Outlook page, you'll see it up here at the top right. Come down to the bottom, click the heart. It opens up this tab. Hit that like button. Same thing here. Click the thumbs up icon. It opens up this tab. Scroll down and click on like button for today's Market Outlook. Again, the more you do that, it helps get our content out to all of our followers on these platforms. So thank you to those who do this day in and day out. Those who don't, you can do it right now while you're watching with 1 or 2 really easy clicks. All right, let's take a look at the S&P 500 with the market forecast indicator. As you can see, the intermediate line still well above the 90th percentile. The near-term line back into the upper reversal zone. So still in bullish territory. We're still on the same near-term run as that momentum line bounced up from Wednesday into Friday and then today. Obviously not a very big range. In fact, I mean, this is kind of like a half day's trading. This would be like what Friday's range. Friday's range is actually almost twice as big. Well, it wasn't. More than twice as big on a half a day than what we got on a full day today. So very, very lightweight, but we are still hovering around that 2.5% mark. I talked about how important that is. Intermediate lines above market sentiment, which is still in the reversal zone even though it's falling. The intermediate line is about to cross over market sentiment here on the NASDAQ. Remember, it's been weaker. The near-term line has crossed back up above the intermediate line finally, back above the 90th percentile. So good strong run on the NASDAQ 100, up 1%, up to a new high today. And let's see, would this be an all-time closing high as well? I do believe so, yeah. So there's an all-time closing high too. I believe so. 21,106. Yeah, so new all-time closing high on the NASDAQ. Remember, it's a new all-time closing high on the S&P, which is the fourth highest. This year has been the fourth highest year since it became a 500 stock index for the number of new highs. And like I said, not with a full month to go, number 3 and maybe even number 2 is on the list. 2021, remember, was number 1. This is the year with the most new highs in a calendar year. So a good move higher there. The Russell 2000 did not move up today, and still kind of hovering around that high point as I mentioned. As I mentioned before, that it appears that we peaked there and then we ran up to it again and now have gone nowhere since we've gotten there. Now, granted, it kind of gave us a bullish intermediate confirmation signal that we have been slowly bouncing up off. This is day one of the near-term line bouncing above 40, crossing above 40. The momentum line needs to be above it, though, and ideally above 80, and that's neither. We don't have either one of those cases. So it doesn't look very likely that the near-term line will make it back into the upper reversal zone and start a new bullish run coming off of this bullish low point that we just had here at the end of last week. And then finally, if you take a look at your Dow Jones Industrial Average, again, intermediate confirmation signal, the strong intermediate posture, oversold momentum line, the near-term line down, in this case below 50, not quite in the bearish territory, but at least it's below 50. So you have the opportunity for a bounce, like you would expect that you'll bounce. Again, same thing with the Russell. We got these intermediate confirmation signals with the market really going sideways, not really pulling back at all, and just kind of going sideways here. And that's the case for the Dow Jones too, which is down 0.3% to bring those short-term sentiment lines lower. Remember, market sentiment's falling and it's below the 80th percentile, but the intermediate line is above it. So if we can bounce off of this, get that near-term line back into bullish territory, this would be day one of it crossing below 60. The momentum line is oversold, but it's not too extremely oversold. So there's a good chance that we can bounce off of this and avoid that near-term line really dropping too far down into that oversold level. All right, just another quick reminder, again, that this is where you get the information for our Black Friday sale. If you wanted to use that here before it expires tonight, it's 20% off. We only offer 20% off once a year. It's during this Black Friday sale. There's the coupon code. If you click that link, it takes you to this page where you can get some more details on how to use it. You put that coupon code down here where it says have a coupon code and fill in the rest. There's some more information out at the bottom as well. And then there's some preview classes that we recorded when we first started this back 7 years ago or so. And then if you take a look here, this is all of our premium resources and trading rooms that we have, 8 application-based classes, 2 Q&As. That's what you do not get with the Plus subscription, as the Q&A sessions, as well as all these tools and services. Again, the 20% off of this works out to be a 40% discount from the Plus subscription, even though you get all this extra stuff in addition to the Plus subscription. So that's why, again, it's our best sale of the year and our most popular sale of the year as a result. All right, let's go back here to the charts and take a look at the weekly chart here. And you can see a nice good bullish candle again, but you can see again we're in this convergence mode. We're not going to get big moves up, not big strong candles. And if we do get big strong candles, it'll most likely be some kind of parabolic move to end the run. We're just kind of getting these bullish candles that are slightly big, but most likely will fall back below that moving average next week, which means that next week we'll probably get a transition candle. It's a higher Hakunashi close as of now, is a higher high as of now, so that's all good. But again, a smaller body that we would not expect to get much bigger, nor would we expect a bigger one next week either. If you look at the 3 green arrow charts, we finally got 3 green arrows in the NASDAQ today with that good run. Now we have 3 green arrows up across the board. If you look at the 2-line version, everything's higher. In fact, you can even barely see the price because it's hiding behind these tags up there. So everything is still pointed higher. MACD is above its moving average. Histogram is up, but still pretty small. Still have the divergence. It's a pretty clear divergence now on the stochastic indicator, and for that matter as well on the RSI and the CCI indicators as well. So pretty clear higher high, though the indicators are not higher down there at the bottom. Taking a look at the Ichimoku cloud. We didn't take a look at the DMI, which also has a divergence, right? Lower highs with the higher high up there. You can see we're getting a drop below 20, so you'll get some light green shading now that the ADX is above 20 on the chart here tomorrow. If you take a look at, now let's go take a look at the Ichimoku cloud. We are above the cloud, positive rate of change. We're back to intermediate strength trend. So that's a good sign, a good opportunity for us to get the mature trend strength, which can last quite a bit of time. When you look at the Bollinger Bands and the Keltner channels, we are in the upper quartile of the bandwidth. The bandwidth is declining, so we're losing some momentum here. The momentum is peaking. We're still got the green dots. The bands are still outside the Keltner channels, but we can't get above the Keltner channel, right? We're just kind of running up against the top of it. So again, lacking that strong move that can really make an intermediate move continue, like persist here. So that's not surprising. As I told you before, today's range was so small. Look at that range up there, the orange line. It was a higher high, it was a higher low. We actually did close above yesterday's high point and last week's high point for that matter. But again, we're not really extending away with new highs. Remember, by not tomorrow, the new low will move up a little bit. But on Wednesday, the low is going to move way up here. So we're really going to get a big drop. And this red line is going to move up to probably above 50 tomorrow, at least close to 50, while your green line's still up 100. So we've already hit the zero. Well, at least we will tomorrow. We'll hit that zero tomorrow there. So we have, oh no, did we hit it today? I think we actually hit it today. Yeah, we hit zero today on the rest. So we are set up for a bearish crossover at some point in time if we don't get the strong new highs, because that will be a really very small range if we don't fill that in tomorrow. If we don't, or at least push up significantly, which I do not expect that we will in the next few days. As I told you before, the range was really small. It was only 18 or 1.8 points compared to 5.47. The volume, again, about as much volume today as what we had on Friday in a half a day of trading. So that's not a very good sign, as you can see when you look at these numbers. I mean, the ATR is falling pretty rapidly. It's still at the sweet spot, but now it's lower than any other period here. The volume is still pretty low, and again, we're really kind of grind. Like, I expected that we'd grind to the upside, but we're really grinding. We're not really getting very much of a move whatsoever. The VIX is well below 15, down below 13.5. This is the lowest level that the VIX has been relative to the VIX 3M for pretty much all year on a closing basis. So pretty extreme low, again, relative to what we've seen for most of the year. We are below the 200-day moving average on the VIX. Then when you look at the VVIX, we are below 90, though we were kind of flirting with getting back above 90 today. So it's not really pulling away and really getting down towards 80, which is again in that getting below 90 is that sweet spot, and we are there, but we're not really like pushing lower. So there's still some concern from a volatility standpoint, that we're not really like solid in this trend, and looking more like it's so extreme on this drop relative again to where we've been for most of this calendar year. That there's a pretty good chance, it looks like there's a pretty decent chance that we might bounce in volatility here sooner rather than later, probably in time for the jobs numbers that are due out throughout the rest of this week. All right, now let's take a look at what's driving the price action today. As you can see, over the last 3 months, IWM and the Qs and U.S. stocks just in general, despite a strong dollar, have been doing very well. Gold's been doing very well again, despite a strong dollar. Let's just take a look at just today here. Just a second. Come up to the 5-minute chart, and you can see it was the Qs world today. Everything else was flat or down. Bonds were down. Here, let me go back to, let's go back to, I don't know if it let me, I had to go all the way back to Friday. There we go. So you can see the Qs had a really good Friday and a really good day today. International stocks, developed markets especially, were doing well. Yields were down today, the past couple of days. Real estate's down. Commodities were down. Remember, yields, commodity, and the dollar. Now, the dollar was up today, so we'll take a look at those charts here. Let's take a look at the dollar first. The dollar has been so bullish. And then it had a down a couple of days at the end of last week, bouncing back up today. I wouldn't put a whole lot of stock into that bounce. I still expect that it will continue. The MACD and stochastics moving into the lower half of the chart, and the main reason why is because everything else is still falling. You can see commodities are still on a downward trend. The 10-year yield, which is something we pay very close attention to, is also still on a downward trend. You can see the bull tags that we got last week, and we're up a little bit today, but still down below 4.2% as the intermediate line is crossed into the lower half of the chart now. Your short-term sentiment is still pretty bearish. You got dark pink shading. and you're more than 2.5% below. So you're going to get a red line here pretty soon. So that's the triumvirate, right? That's the bullish for equities triumvirate when commodities and yields and the dollar are all down, and that's kind of what's been playing out so far here. And you can see we had a pretty decent run on breadth last week, down a little bit here today. If you take a look at the McClellan oscillator, it pulled back from Friday's high point. We are almost back above 500. We are still above 35, so it's still a decent amount of breadth. When you look at the new highs here, let me pull up the new highs. There we go. If you take a look at the new highs and the new lows here, let's come over here to this chart. Despite the bullish sentiment being pretty bearish last week, or not so bullish last week, we're still got a significant number of stocks above their 50-day moving average, a significant number of stocks above their 200-day moving average as well. If I take a look at the number of new highs, that's still pretty strong, up above its average. The average up to 219. We're still at 236. Number of new lows still pretty low. What still is continues to be a concern is that skew, as I mentioned this last week. Where is the skew right here? It's still up to a pretty darn strong level, and that's not necessarily the level that we want to see. A little bit too high there. Pretty extreme, actually. So not the net new highs is still pretty strong up above. So everything from a breadth standpoint is still pretty strong. The breadth is looking pretty good. The money flow is looking pretty good from that perspective as well. As you can see, the money flow is still pretty strong, though we are still not able. We're still in bullish territory, though not getting above that 80 level like we do when we're making these strong legs higher. So this is definitely the weakest leg of them, even though on an absolute basis, you can see we've really kind of taken off here late in this past week or so. But if you notice, like the volume, as I mentioned before, the volume and the trading ranges are just really, really low and really slight. So, and the other factor too continues to be, how the sectors are performing. You can see technology rebounding today after a rough week last week, as we talked about in our Friday market outlook video. Let's see what it looks like here when I pull up this chart. There's technology. If I were to, I have to zoom out to last Friday again to get the other sectors. So discretionary did pretty good on Friday and continued to be pretty strong today. I mean, that's the three sectors you want to be bullish, right? And you can see, look at the big drop in utilities and real estate. That's a tremendous drop after a pretty decent rotation into some pretty strong momentum here and into the leading category for utilities. It's a pretty decent drop there. Real estate and staples, also safety trades, appear to be kind of slowing down their momentum. XLC, XLY have been dropping to the left. Same with XLK. Pretty decent rebound there. If I take a look at the sector comparison chart, let's look at this one first. Let's look at XLK. Let's look at XLK here first. Let me bring down to here. And we'll look at XLK. Remember, this is the one that we need to be outperforming. And we've been underperforming, but this is a nice little rebound back above the 17-day moving average after getting below it last Wednesday. And then this is the one that we really like to see. It's like, you look at utilities. Haven't been so strong, but really breaking down at that ratio chart and rolling over in the leading category. And the same thing with energy, which is another sector we do not want to outperform. And it's really come down the past week and breaking below its 50-day moving average. You can see its RRG lines are both moving lower. Here's what energy looks like relative to SPY on its chart here. Let's go to it. This is a one-year chart. This is what we want to see, right? That's a good breakdown there, back below the 50-day, well below the 200-day. The PPO is still already negative, potentially rolling back over. And then technology is the one that we want to see leading the way back higher again. And again, it's not the greatest. We're not back above the 50-day or 200-day, which is where we need to get to. But at least we're back above the 8 after a pretty bad week here last week and all the chatter about the broadening trade. And the reality is, when we're going to be bullish, it's still going to be these areas of the market that lead the way higher. All right, well, that takes us to our trade idea of the day. Today it's on NEE. Let's pull up NEE, utility company. We've traded this one before. It's continued to rally, but it failed at the moving average and has bounced back down. So we'll take a look at doing another bearish trade here. You can see a bearish near-term peak after a bullish high and then a bullish low. Then we failed here at the bearish near-term peak. We're already out back below 60, back below 40. Extreme low on the momentum line. The intermediate line still below market sentiment, still in bearish territory. The near-term line has not crossed below it yet, but again, based off the momentum line, you would expect that it will tomorrow. You can see the bounce down here back below 1.5%. Pretty good. Bear tag and then a pretty clear bounce down. If you look at the weekly crossover, the weekly chart during this rally, we never really got any strong bullish candles. Just a few transitions, and then now still below the 10-week moving average, still falling PPO, and you can see the bullish candles is not very big at all. If you look at the 3 green arrow chart, we obviously got 3 green arrows when we got that bear tag, but then now you're back to at least 1 red arrow there, back below all these moving averages, including back below the 8 and the 17-day moving averages. You can see here, still above the point of control, but back after being above the 17, crossing back below all 3 of those, still below the 50. MACD looks like it's turning down, still above its moving average, but back below 0. Histogram's falling, stochastic's above its moving average, still, but not by much, as it obviously looks like it's slowing down too. And you'll see that a lot of these in these oscillators are not bearish per se, but they're also whatever bullishness we had is weak and is kind of failing. You can see you're almost back below 20. A bearish crossover on the after a brief bullish crossover. The ADX back down below 20 there. The RSI and the CCI moved up to bullish levels. These got above 50 here, got well above 100 there, but now back below both those levels. So just like that, not as bullish anymore. The Ichimoku cloud had a bearish trend, an intermediate strength, well, actually pretty mature bearish trend. And then now we're back below the green line, still below the cloud, still pretty negative rate of change. The cloud's still pink. And we'll see if we renew that trend or not. And then finally, looking at your Bollinger Bands and your Keltner channels, you can see that we are back into the lower half of the bandwidth there. The bandwidth is still really small. As you can see, the rally ended this bearishness, but that's a very weak bullish momentum. Never did get green dots on the bullish side, and as I mentioned, already back into the lower half of the bandwidth. So with that, we decided to do a long put vertical spread. So selling the low 20 deltas, buying this 1 strike away, getting about a 3-to-1 reward to risk ratio if it works out. And I got all this flexibility in case it doesn't work out immediately, and we've got plenty of room for it to go down from a volatility standpoint between now and January expiration. And there's our trade for today. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember, subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Join us at MarketScholars.com for free. Follow and like us on Twitter and Facebook as well. Have a great rest of your Monday night, everybody, and we'll see you all tomorrow.